I see three major external trends today, two of which are pretty developed already and obvious, and the third one is still emerging. The first trend is globalization. Companies these days compete on a global scale for talent, for customers, and for capital. They all behave in a very similar way. That means if you have uncertainty in the business, there is increased volatility, and companies need to manage this volatility. Resilience also becomes a topic since many blows come unexpected, and companies need to prepare to either absorb these unexpected blows or to get back on their feet reasonably fast again. The second trend, even though in the Finance Leader report of ACCA in October 2012, even there it has been prioritized rather downwards, is the topic of compliance and governance. I think compliance with laws, with regulations, and with tax regimes is not only a risk matter that needs to be addressed, but also a huge opportunity, especially for multinational companies. And this needs to deserve sufficient attention by the finance organization. The third trend is an emerging one and has to do with sustainability in the larger context, and in particular with the impact on the environment and impact on societies. What is still lacking in today's discussion is a direct quantification of the cost to the environment and to societies. Once this has happened, accounting organizations and controlling organizations can deal with it as a cost, as a business cost, and change behaviors. I think this trend will emerge very quickly over the next couple of years, and finance organizations may even consider to drive that trend rather than be reactive to it. If you look at the recent ACCA Finance Leaders survey, CFOs seem to complain that there are too many priorities on their plate. And I think this defies the purpose of the CFO organization, since you're supposed to prioritize for your entire entity. So the finance organization also needs to strictly prioritize their resources. And I think the answer in detail depends very much on each individual company or the life cycle the company is in. But as a guiding principle, I would look at it from a triathlon metaphor. You do not win a triathlon if you win the swimming competition but exhaust yourself so much that you have no energy left for the cycling or the running. You win a triathlon if you're consistently performing in each competition and if you allocate your resources to all three competitions to make the maximum. And I think the finance organization needs to do exactly the same thing. First and foremost, the finance organization needs to compete in its core responsibility, which is accounting, which is controlling, and its liquidity management. This is an uncompromising area where value is added and where currently many things are happening in two elements of the value equation, namely effectiveness and efficiency. Effectiveness is a topic of what are you doing and how well are you doing things for your business partners. Which reports are you generating, how timely are they published, how low is the mistake rate, and how targeted are they answering the needs of your customers. Efficiency is cost leadership. I would not look into cost cutting alone. I think it's a matter of cost leadership. Cost is not necessarily bad, but it needs to be managed. And the finance organization needs to look into both elements to truly add value. The function of a CFO is to a large extent defined as the custodian or guardian of assets. And these are tangible and intangible assets. So the function comes with a lot of authority. What finance organizations need to do is they need to live up to that authority they're given by the job description. And that means on all levels in the finance organization, the employees up to the CFO need to lead by example. They need to demonstrate uncompromised ethics and integrity, and they need to live the internal rules of the company as well as external factors by example. And in doing so, the finance organization has a tremendous role to play and to communicate both subtly but also actively into the organization what kind of culture the entity wants to demonstrate and to support and what kind of behavior they want to encourage. The relationship between a CEO and a CFO is a very interesting one. On the one hand, you need to establish an atmosphere of mutual respect, trust and cooperation. On the other hand, the CFO at least needs to remain independent and act as an independent set of eyes or brain to look at the actions of the CEO in his role as the custodian of the assets. And this would, in theory, be very simple, but since we deal with people and egos, it's not always that straightforward. But the ideal relationship between a CEO and CFO can be found in other industries, and I think it's in the airline industry again. If you look at the cockpit crew, between the captain and the first officer, they both assume a huge responsibility for their plane and the passengers. Both of them look at each other at eye level in terms of skills, in terms of professional trust, but also in terms of personality. Either one could fly the plane single-handedly, and they do so by choice when they land the plane, or they do so in crisis mode if something unexpected happened. And both of them, in normal working mode, assume a work-share model to reduce the workload and a mutual oversight in checking on each other in a constructive way, which improves performance, but it also reduces the number or the impact of mistakes when they're made. And I think that is an example or a metaphor to describe the ideal relationship between a CEO and a CFO. I'm convinced that talent agenda is of tremendous importance, not only for the CFO, but for the entire company. The global war for talent is on, and people are the ones who will differentiate companies compared to the competition. It's important that talent management is an active part of the job description of a CFO and not an afterthought or an annual one-time activity. It's important to map out in the future what kind of skills you want to have in your organization and what kind of attitudes you would like to have. And this is something you need to engage your business partner in throughout the strategic and operative planning. Skills can be technical skills, tactical skills, strategic skills. And attitudes is something that takes much more time to develop, because it's how people are wired, how they tick, how they approach problems, how they deal with uncertainty. But if you do that in a forward-looking manner, you have time to plan for that, and you can make the decision whether you groom people in-house, whether you have the right talent base to develop further, or whether you need to acquire them from outside of the company. And I'm very happy that companies or organizations like the Singapore CFO Institute or professional organizations like ACCA actively address a portfolio of skills and attitudes for CFOs and the finance organization to support companies in closing the gaps, in training their staff, in giving them opportunities to mentoring, to peer group exchanges, to exposure, and to help them close those gaps, competency gaps for future requirements in a consolidated effort.